As we see markets rebounding today in Europe and locally, of course, the JSE coming back from that 2% sell-off yesterday. What do you make of this rebound?
Well, I think obviously very heavily sold off on Friday, again on Monday, and people coming in to pick up some of the blue chips today. I think some of the general miners got hit really hard, and people coming to buy those again. There's not too much volume coming through on the buying, and the volatility is making it very difficult for asset managers to make long-term calls at the moment. If you take Deutsche Bank for argument's sake, if you had bought on Thursday, by Monday you would have been 8% down on that trade. So it is very difficult for asset managers to put trades on, and at the moment we have these big dips. There is some buying coming through, but profit taken off quite quickly.
There are so many mixed reports in terms of whether we are moving into recession or not. We had the European Commission chief saying he's confident the euro will survive and that the European economies won't move into recession. The Singapore finance minister saying he's concerned that the global economy is moving into recession. China's economy won't grow by 9% according to a Chinese official. What are you taking of all these sentiments that are coming out, and what are you pricing in at Nedbank Capital?
Well, it's very difficult at the moment generally to see where everything is going with sovereign debt issues in Europe and a very slow and weak numbers coming out of the States. If you take a look on the commodity side, the big general miners just don't want to pick up even with very strong commodity prices, and that is indicating that the markets are expecting commodity prices to come down and therefore a slowing in growth. There is a bit of a fight-off between that and people. The other side of the coin is that even though everything is bad, the valuations of these companies are so good that you can still buy them. So a bit of a fight-off between the bulls and the bears, but the market indicating, if you take a look at the general miners, that they're expecting commodities to come down and therefore a bit of slower growth going forward into the fourth quarter.
Some of the big news, another piece of big news today that has helped to spark some of the risk-taking that we're seeing, the Swiss Central Bank choosing to peg the Swiss franc euro exchange rate at 120. Now, this, of course, to ward off the Swiss franc from the overvaluation that we've seen. This is, of course, a rare move by a central bank in a developed world. The last time the Swiss Central Bank did this was in 1978, where it pegged the Swiss franc to the German mark. What do you make of this latest development?
Well, it's very difficult to do that over the long term, so maybe in the short term it will give a boost to the euro and obviously soften that the Swiss franc. But whether they can carry on doing it indefinitely is, I don't think they'll be able to do it. So maybe they'll get some stability, maybe get some growth coming through from a slightly softer Swiss franc price. And maybe get some growth going forward in their own economy. But I don't think they'll be able to do it indefinitely. So I think maybe a few months and they'll have to change that policy again.
Of course, yeah, pegging an exchange rate comes at a huge cost, and it has helped to boost the euro today, trading above that 141 level. It went down to around the 140 level. But there are some downside risks to the euro this week. We've got a lot of developments taking place in Europe. What do you take? What are you pricing in when it comes to where the euro is likely to trade in the next few sessions?
It's difficult to tell. I mean, I think if you take a look at Italy's bonds and where the interest rates are trading and the swaps are trading, they're more expensive now than Spain. So they're just showing you that Italy's under a lot of pressure there. People looking at the economy in Italy very weak. At the same time, France came through with very good numbers. And Germany slowed, so it's a mixed bag there. And I think that more and more demand is going to come and needed from Germany and France to try pull the eurozone out of this the sovereign debt issue that they're facing at the moment. We're waiting for ECB on Thursday to announce something. We're waiting for Barack Obama as well and the Fed to speak on Thursday as well. So I think the market will be relatively quiet over the next few days and to see if there is any more stimulus or any political turnaround coming through later in the week.
And of course, the rand continues to remain resilient despite the volatility and uncertainty. Just below that 7 Rand 10 level, it's failed to break above the 7 Rand 20 level. It appears buyers coming in at that 7 Rand 20 level. And also, strong demand persists for local bonds. Of course, the carry trade there factor is still playing out.
Yes, still a lot of flow coming through into South African bonds. And the rand, just doesn't really want to break. The flow coming through there is so big at the moment that even with all the negativity in world markets currently, the rand did have 1 or 2 days that it blew out through past 720 intraday, but it's always come back very aggressively and back down to the low sevens and actually went below 7 rand. So I think at the moment you're looking at about 690 to about 715 on the rand until we get some clarity out of Europe.
Most blue chip stocks are trading to the positive today. Anglo, BHP all trading high, and Naspers sitting at the top of the top 40. From a valuation perspective, where do you see opportunities in the market today?
I think if you take a look at it, again, the general miners, Anglo's PE is around about 7 PE, forward PE, Billiton about 7.2, so showing a lot of relative value there. If you take a look at then the retailers, the gap between the relative gap between the retailers and the general miners is the highest it's ever been. So we're starting to see the retailers being priced very high and quite expensive at the moment. But this trade has been trading like this for quite some time. We do expect at some point for it to turn around and resources to rebound. So general miners over the retailers at the moment.